Time now for an in-depth look at the market news on this Friday, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for making time this afternoon.
Thank you for having me today.
Well, stocks on Wall Street down quite a bit overnight, but the futures are up just as much right now. It seems investors don't know which way to go when it comes to these big tech stocks. What's happening in the global markets?
Yes, as you said, the market is quite volatile at this point in time. The reason for that is because overall market in general were up quite significantly from the bottom of March. If you look at the S&P, it's up more than 60%, and NASDAQ was up more than 80% in a short period of 5-month period. And that's probably causing the current volatilities. And given the fact that the futures maturity is coming towards end of next week, so volatility is probably inevitable at this point in time. If you look at the U.S. market trend yesterday, it was quite strong at the beginning of the day, but it closed with deeply red on Thursday, following the sharp rebound that we saw in the previous session. And the reason for such a correction, we don't see anything major other than the political uncertainty that seems to be continuing in regards to the additional boosting measures. And also, I guess people are quite uncomfortable with the tech shares at the current point in time, particularly with Tesla share price being very volatile and falling from the peak to bottom of almost 34% plus. If you look at the Senate, the Democrats blocked a Republican aid plan, claiming that its insufficiency to mitigate the pandemic cost, as it did not include a second $1,200 direct payment to individuals and the new relief for state and local government, and reduced unemployment insurance to $300 per week for the previous from the previous $600. So clearly there is a discrepancy between Democrats and Republicans in regards to the boosting or the supporting aid for the COVID-19. On the corporate side, the overall IT segment, shares like Amazon, Microsoft, Apple, all suffer quite significant drop, while Tesla, being the biggest being company, it did recover quite nicely the day before, and yesterday also was up, but it kind of lost most of its steam. All in all, market is expected to be fairly volatile going forward until probably end of next week.
Well, that uncertainty in the U.S. is rubbing off on investors in Korea, it seems. The KOSPI and the KOSDAQ both down today. Tell us about the local markets.
Right. Despite such a volatility that we are seeing in U.S. market, yes, Korea is volatile as well, but the level of volatility seems to be fairly minimal. If you look at KOSPI yesterday, it added about 0.87%. After a decline of 0.75% in the previous session. And then today, the market was kind of fairly down for the most of the day, but towards the end, it closed slightly up, where basically the KOSPI was kind of flat, while KOSDAQ was up about 0.47%. I think that the government support in regards to this fourth supplementary budget is making the investors feel a bit more comfortable, and government's clearly attempting to aid struggles of the small businesses facing massive closures amid this unprecedented social distancing restriction that we're seeing right now. The government is willing to spend about 7.8 trillion won, another $6.6 billion towards the small businesses and as well as households. And the level of the new cases for COVID-19 seems to be reasonably stabilizing, but nevertheless, still it's well above 100 cases per day. So the level of social distancing is remaining at this current point in time, and that is causing some discrepancies in terms of the equity market for Korea.
As you say, I misspoke there, as we saw the KOSPI was up just a fraction of a percent there at the end of the session. But oil prices we see are falling again on a surprise increase in U.S. inventories. Gold rising for a third day in a row. What's the story in oil and gold, and where do you see them going?
Right. In terms of the liquidity condition, it is very strong at this point in time. So if that's the case, the oil price or the gold price should be going up. But even with high level of liquidity, in terms of demand and supply side for oil seems to be kind of broken in a sense, because more and more so the demand for the electric cars is rising versus the gasoline cars are declining. And also the current economic condition is clearly in negative territories in terms of the growth rate. So therefore, demand side seems to be quite poor. So that's the reason why the oil price remains to be below $40. We've been saying that the oil prices, the paradigm shift has actually occurred both sides of demand and supply, and therefore we're not going to see $70, $80 per barrel in the future ever, maybe. Most likely the range bound will be somewhere between, say, $35 to $50 range, and that is clearly much lower average than we saw in the past 20 years plus. In addition to the oil price, gold price did recover quite strongly yesterday, but today it seems to be falling by about 0.7%. Silver is also going down by about 1%. Also, in general, I think the volatility remains to be quite high because we're quite uncertain how fast the global economy is going to recover, and also the global inflationary pressure seems to be timid. If that's the case, then the gold price rising might not be as strong as most of people anticipated. But we believe, though, high level of the M1 growth rate of almost 40% year-on-year growth, we think that the gold price has more room to go up, somewhere between 10 to 20% over the next 12 months or so.
We'll be watching that for sure. Thanks so much for coming on today, Mr. Yu. Appreciate it.
Thank you very much.